Welcome back. Let's get chatting about the markets, the way forward. Amit Gupta, Senior VP Fund Manager at ICICI Securities PMS, is with us on the show now. Amit, morning. Rima here. The question is that up until now, it's only Infosys which has cut the guidance 3 months into the year. But other companies like HCL Tech, LTTS, L&T Technology Services, they've held on to their full year guidance despite a soft start. Do you think there is a risk that even the other companies are likely to lower their assessment or, cut their forecast as the year progresses? That's the kind of environment we're in for IT.
So I think there is definitely a possibility, though we are assuming that these may be the lowest numbers in terms of guidance. But if you look at Infosys, yes, it's a leader. And if they are, bringing it down, and they have been conservative actually before also. But I have not seen that, because if you look at the previous financial years, they had brought down the guidance conservatively actually for the whole financial year. But then on quarter basis, they were increasing it higher. So this time I have seen that again, they have brought it down. So that means, the situation may not be very conducive. I mean, yes, we are seeing the deal wins are there, but we have also seen that it has been, postponed. I mean, some of the BFSI, retail or high-tech IT, clients, they have been postponing some of their discretionary IT spending, and that is where it may be a consolidating time actually for the IT pack. They have come down. I understand their valuations are almost equivalent to the 15-year average price to earning. So I think no doubt levels are good, but consolidation is going to be there actually in this pack. So you should not expect, the very sharp moves on the higher side once the leader is showing you that kind of downward scenario.
Okay, hi Amit, thanks for joining us. What are your thoughts on the bank earnings which have come through? Because we had HDFC Bank, which was quite good. IndusInd Bank posted a very good set. Even some of the smaller ones, right, like Union Bank have done very well. What do you expect from the banks this time? And do you think the move higher on the market could be led by this pack?
I think alpha can be made through the PSU Banks. So if you look at this quarter, 95% of year-on-year growth is expected in the PAT of PSU Banks. And if you look at private, it is around 35%. So it's very obvious that this now going forward, so Union Bank results are already out. I think going forward, once you are going to see more PSU Banks results coming out, I think that is also going to be good. And I think this is a scenario, if you look at the last 10 years now, NPA levels are 10-year lows, credit cost is 10-year lows. And on the top of it, I think most important point is if you look at the corporate lending book, so it is just growing by 6%. It has not gone to 15%, which is the average credit growth we are seeing in the market from the banks. So if the corporate lending is low and the corporate capex was also low before, now it is picking up. I think this may be the time to look at the PSU banks which have higher exposure to the corporates also. And now you have seen that agriculture as a theme also, can revive. So at least the NPAs which were expected actually before because of the lower monsoon, that is also going off. So I think this pickup in monsoon, lower inflationary trends, possibly subdued yields. So this can be better actually for the banks. And though the NIMs are getting shrunk, and that is why I think still the valuations are relatively better in the PSU banks, which should be looked at. They are now just hitting ROAs of continuously ROAs for 1% return on assets. I think this may be the driving factor going ahead.
I remember you like power as a space, right? NTPC, NHPC, etc. Amit, we had a flurry of excitement earlier this week with, I think, Goldman coming out with a note saying, putting out big targets, etc. You still own those names, and what would be the top idea there?
So we still own, and we believe this is just the start actually in the power space. You are seeing those stocks. Even though the market has moved up sharply, you may say that they are not picking up the pace as per the market, but they are very, very regular actually movers. If you look at NTPC now, almost at the cusp of that kind of breakout near 200. If you look at NHPC also, it is above that price for the last many years. We were seeing that it was around 38.40. Now it is above that. And why it is happening? I think because of this move towards the renewable. If you look at NHPC, the hydro, so traction is going towards the hydro now. So whatever capacity they had built up, almost the same capacity now they are going to build up again in hydro. And some part of it they have already done, out of which it is going to be ready now very soon. And this is where the revenues will start kicking in. And if you look at NTPC, so almost 70 gigawatt they had in thermal, 60 they are saying coming out in the renewables, and then they will start selling stake So I think the re-rating is happening in this particular space, and that is why the financing companies also. So today only you had this news that REC is going to lend now possibly to many renewable companies now going forward. So I think we had forgotten this renewable part to some extent when we were coming out of pandemic because of the immediate requirements. So coal and all, thermal and all that came into picture. But I think again we are going back to the renewable part, and this is where these stocks are going to come up. And the power companies who are changing the capacities into power renewable, I think they will keep on buzzing now.
Okay, got that. Amit, it's always great to have you on the show. Thank you for taking out the time and speaking to us today. But on that note, we're going to wind down on this edition of Trading Hour with the news that the markets have not really done much in the past half an hour or so. 190 points lower on the Nifty, and the Nifty Bank just around 80 points in the red. We're going to wind down, but thanks for tuning in. Halftime Report is up next.